This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, March 13th, 2015. Euro dollar. So finally some signs of a potential base in the euro after the market dropped down to fresh multi-year lows at 104.95. But a break and close back above Wednesday's high at 107.17 would be required to confirm the onset of a correction and take the immediate pressure off the downside. A break and close above 107.17 could open the door for a more significant correction back towards eventually previous support, now term resistance at 110.98. Certainly, with daily, weekly, and monthly studies significantly oversold, there is room for a significant correction before the onset of a bearish resumption. Sterling dollar. So cable underperforming in Thursday trade, with the market trading down to another fresh 2015 low. The key here is the recent break up below that previous January 2015 low at 49.51, which confirmed a lower top at the 55.50 area and now exposes an eventual test down towards the 43.50 area, which is a measured move downside extension. At this point, any rallies in the market should be very well capped ahead of the 153 area, while only back above recent highs that we saw up above 153 into the 154 area would delay the current bearish outlook. Ultimately, though, a break back above 155.50 would be required to negate the bearish outlook, so the pressure continues to remain on the downside for this market. Dollar yen. So dollar yen has recently broken to fresh 7-year highs beyond the 7-year peak from December at 121.85, and the market has since stalled out a little bit following the break. But ultimately, the break is a bullish break and does expose an eventual move to the next measured move upside extension, target at 128.15. In the interim, any setbacks in this market should be very well supported in the ahead of 118, while only a break back below 115.55 would negate the bullish outlook. Euro Swiss. So for Euro Swiss, it's been mostly a story of consolidation over the past several days, and the market has been slowly retreating off of recent recovery highs at 108.15. But the recovery outlook remains intact while the market holds above 104.15, and a higher low is now sought out ahead of the next upside extension beyond 108.15 and towards the 110 area further up. Aussie dollar. So despite the recent recovery that we saw on Thursday in Aussie, the market has recently broken down below some key previous support at 76.25, which had been a multi-year low, to fresh multi-year lows at 75.60. So this recovery here is only classified as corrective, and while the market holds below 79.13, the bearish outlook is firmly intact in favor of the next downside extension towards 73.35. Dollar CAD. So dollar CAD continues to consolidate over the past several days, although the market has been slowly grinding higher within that consolidation back towards key resistance in the form of the 5-year peak from late January at 128. A break and close above 128 will open the door for the next measured move upside extension towards the 2009 peak at 130.65, while inability to do so will keep the consolidation in play and the market well supported above recent lows at 23.50. At this point, look for any setbacks to be supported into the 125 area, while only back below that 123.50 low that we saw on the 3rd of February would compromise the bullish outlook. Kiwi dollar. So Kiwi dollar has mostly been chopping around in recent trade, although the market is confined to a broader underlying downtrend. A lower top looks like it could be carving out around the 76.14 area, but that would need to be confirmed on a break below the recent 71.76 multi-month low. A break below 71.76 is favored, and this would open that fresh downside extension towards a measured move objective at 67.35. At this point, look for rallies to be very well capped ahead of 75, while only back above 76.14 compromises the bearish outlook. SPX 500. So in recent trade, we've seen the market come well off that recent record high at 21.20 from back on the 25th of February. But in recent trade into Thursday, we saw a little bit of a bounce in this market, trading back towards some key resistance in the 2067 area. Ultimately, despite this latest bounce, the topish outlook is favored, with only a break back above 21.05 to compromise and re-expose that 21.20 record high. A break below recent support at 2040 will reaffirm and strengthen that bearish outlook and open the door for an acceleration down towards 2000. Gold. So gold has been in intense decline since January of 2015, with the market now trading all the way back down to lows at 1147 thus far. But the breakdown of key support and key internal support around the 1165 and 1170 area does suggest that the market's ready and poised for a full 100% retracement back to the critical multi-month, multi-year low from 2014 at 1131. That's all for now.